all knew what was going on. Anyone on Wall Street, had a sense how it was changing for the worse. They had what they called a culture of excellence. Ultimately, it was a very aggressive banking culture.
Fuck this shit, that cunt, cock, asshole.
I had some real issues with how that was manifesting because around that time there was a lot of corporate fraud that was becoming apparent. My graduate degrees are in statistics and operations research, undergrad in math, so that was always my kind of angle into Wall Street.
When was it time to blow the whistle?
I just decided I was going to leave Wall Street. All this stuff was going on. I didn't want a part of it. And then I found also there was lack of understanding. I just sort of wandered into journalism.
Let's bring in an insider. She is former Goldman Managing Director Nomi Prins.
Real economies throughout the world are deteriorating, and growth is deteriorating, manufacturing is deteriorating, production is deteriorating. We're starting the beginning of a prolonged period now of a recession or even worse.
Odds are shifting very quickly. This could be it.
People don't have the same exposure to the trading systems on Wall Street. So that's what I've done in this particular system that I've developed, something called 25-cent contracts, and presents a way for a person to take advantage of that scenario in a cheap way and in a fast way and in an easy way. The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life, in any aspect of your life.
Nomi Prins is a former Wall Street trader that you would have seen on Fox, CNBC, and Bloomberg television news. She actually regularly advises the Federal Reserve, the IMF, and the World Bank on important financial policy matters. She's ex-Goldman, Lehman Brothers, and Bear Stearns, and she really knows her stuff. But what really impressed me was her 25-cent contract strategy, which takes advantage of a little-known market anomaly that happens every day around 10 a.m. if you know what to look for. Now, as the host of this episode, I was able to secure an exclusive spot, but you must act now. And as a former Wall Street trader, I think this is a super exciting strategy for investment. So if you're interested, you can click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. I know you're going to enjoy the training, and I know you're going to enjoy this incredible episode with this incredible woman. The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Nomi Prins, the former Wall Street banker turned investigative journalist, financial expert, and speaker. You have worked at some of the most powerful banks on Wall Street, including Goldman Sachs, Lehman Brothers, and Bear Stearns. You've been a television commentator for the BBC, CNN, and CNBC, and your work as an investigative journalist has been featured in the New York Times, Forbes, and Fortune magazine. You're also a best-selling author with your latest book, Collusion, How Central Bankers Rigged the World, shedding light on the dark conspiracies between private and public banking. Nomi, welcome to London Real.
Thank you so much, Brian. It's so exciting to always be in London, but particularly to be here with you at London Real, because we do share so many background similarities.
I know, and I want to get into all that today. What's it like being in London? I guess for you being back in London, because you came here for the financial markets even before I did back in '97.
Yeah, actually, I was here from '93 through 2000. So I was here during the initial steps towards the EU, when Britain was talking about what the role would be relative to the rest of Europe, and all the conversations from a trade and market and banking and geopolitical perspective back then. And now we're sort of in a different manifestation of that. with conversations about what's going on in the EU, the economies, Brexit, and so forth. So it's like a bit of a time loop. So every time I come back to London, it's a little bit of a mini time loop. I do get back here several times a year to work on things, but it always feels like coming home. Even though I only lived here 7-8 years, it always feels like a second home to me.
Yeah, no, I remember that time. Like, people don't remember in the early 90s, no one knew if the euro would happen, if the European Union would happen. It was still like kind of a dream. And all the currencies were all over the place. They all had different interest rates, usually really high. And then they all kind of started converging. Well, I mean, you got to see all that happen. And now some fallout from that happening, right?
Yeah, it's really interesting because back then, like being inside a bank at the time, and I was working for Bear Stearns, but of course being part of banking in general, in the City of London in general, you know, all my friends were in banking. That was all the conversation that was going on. It was convergence trades and what would happen to the European currencies and nations and bond markets when they converged into each other, and how the UK and Britain would be a part of that or not a part of that, and what the sort of thoughts were on all sides. And it's really interesting because back then it was about, okay, what's the trade? As well as what's happening politically. And now that I'm somewhat outside of certainly working within the banking system, it's more like I can be an observer as well in terms of what's going on, and that's really very interesting because some of the same conversations are going on. You know, Brexit is all about, you know, some people not wanting Britain to be a part of the EU, which was exactly the conversation that was going on in the 90s, and some people want it to be, which was exactly the conversation that was going on in the 90s. It's just that all this other life and stuff and events has happened in between.
What do you think is going to happen from here with like Britain, the pound sterling, and all that stuff? I mean, I don't want to get too deep into it, but like, what do you think is going to happen to this country and Europe and all that?
Well, one thing that's happened since the referendum in June 2016 for Brexit is that there's been massive uncertainty, right? There's been political uncertainty. There's been a couple of prime ministers along the way. There have been a lot of economic fallout from the uncertainty around that situation. What's trade going to look like? How are companies going to be able to invest? Where are people going to go? Will they be able to go seamlessly back and forth? You know, particularly in service industries and in airlines and in banking and all these different places. And so that uncertainty is really dragged, I think, on Britain as well as in the streets. I was in Birmingham over the weekend, which is it's where the Industrial Revolution started, like in the world. I mean, it started in Britain, it started in Birmingham, and just in a pub with just, you know, regular local people talking about what was going on. And it's interesting when you get away from newscasters and away from London and away from sort of people that are more sort of talking about things rather than experiencing them on the ground, how things change. And those conversations in Birmingham were very much about the uncertainty surrounding how their lives would be with Brexit, without Brexit. You know, not so much, you know, who in Parliament is doing what, but how does that actually impact their daily lives? Is it going to make the economy harder for them personally? Is it going to be easier? Like, what's happening? And just the drag of it for years has made people very tired on the ground. The not knowing has made people very sort of tired on the ground. And that's one of the reasons, just from a financial perspective, the currency, the pound, has been very depreciated because it doesn't know what it's supposed to do. And as a result, investment doesn't come in here. The pound gets weaker, and that's what's happened. Recently, as there's a possibility that there won't be a Brexit with no deal, that's kind of been filtering throughout the ether, the pound's been increasing a little bit. And that's because the pound wants certainty. The pound doesn't want a crash and burn scenario. The country doesn't really want a crash and burn scenario, despite what some politicians are saying. So my feeling is that there won't be a no-deal Brexit. There might be a Brexit, but there will be some kind of a deal, even if pieces of it are put on the table with the idea that they can be negotiated later, but still put forth as some kind of a deal. Because I just don't think that the integration between Britain and the EU, because there is so much trade, there is so much of an economic connection with those areas, plus with respect to the rest of the world and what their place is, I don't think we have a no-deal Brexit.
You mentioned uncertainty, and that's such a big thing. And we got an election year. We've got always seems like crazy things happen around the world, and oil prices and all these things. And we actually just got done taping a short piece about something you've just come up with, which you call your 25-cent contracts, which I believe is kind of an option play, but you're really a macro person. I'm just wondering if you could maybe explain just briefly what we talked about, and also how does that play into this worldwide volatility? And by the way, we taped that piece. It's not going to be on YouTube or on our website, but there's a link below. It's londonreal.tv/Nomi. That's Nomi if people want to watch it. But what is that all about?
Right, so one of the things that I have done since leaving Wall Street and leaving the banking environment from respect to working for any of those institutions is I've been writing, I've been doing journalism, I've been speaking with governments throughout the world and institutions as to how better they can position themselves to help the real economy, to help like real people on the ground. So my entire sort of focus has changed to be about that, to exposing what's wrong and to also helping people on the ground. And one of the things that I actually realized when I left Wall Street is that, you know, you don't get paid as much, right? I mean, it's very simple. It's like there's a lot of money that's coming into banking positions that one can make, but when you make the decision, as I did, to leave all that, I also want to do my journalism. I want to fund it and things like that. So I look at how, very carefully at how I've invested the money and protected the money that I've made since then so that it can last me, so that I have the freedom to do journalism, to be a whistleblower and so forth. And that freedom is really important to me. So one of the things that I've developed in this trading system is I've taken sort of the analytical mathy stuff that I did, the wonky stuff that I did. Which is
what your specialty was.
Which is what I did,
I mean,
yes.
You ran these big quant departments, what we call these rocket scientists.
Yes.
I mean, that's why I got recruited at MIT to go to Wall Street at Bankers Trust, because they were looking for these math quants, and you had 30 of them working for you.
Yeah, I mean, in London, they were incredibly, you know, gifted intellectually and mathematically and statistically. I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, you know, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best you know, sort of protect that investment for those risks. And so that's a lot of what I did. So leaving, I wanted to protect what I had, again, so that I could continue to do what I do and be free to do that and say what I need to say in the world. But also I've realized over the years that people don't have the same exposure to the sort of bigger trading systems on Wall Street. I mean, yes, they might have a brokerage account, but they don't really have you know, the ability to create their own systems. And so I looked at, you know, what are some of the ways that I can create something that they can use, like regular people on the ground can use to access some of what Wall Street does all the time. And it's a little bit like swimming. I mean, I'm a diver and stuff. It's a little bit like looking at sharks. And you know, consider Wall Street bankers like sharks, right? I'm sure that's not a big leap. And in the ocean, there are these things called shark scrubbers, right? And they're actually little fish that look exactly like sharks.
Yeah, I've seen
but
them.
they're tiny.
Yeah, they swim alongside of them,
They
right?
swim alongside. They sometimes they actually like suck out the sort of nutrients sometimes from the shark itself, like the sides of the sharks, and they also swim beside them to get those nutrients. So they kind of like shade the shark as the shark's moving around doing its thing, but they're tiny. And so the way I look at systems that can help individual people is that you kind of have to be aware of what the sharks are doing, because they're doing it. You know, they're moving in the market sense, they're moving the markets, but also you can sort of be alongside of them and sort of be observant and sort of extract some of the value from those types of trades, especially when they're going fast. So right now we have a situation where there's a lot of volatility in the market. And what I see is momentum, like accelerated speed of how trades are happening, how geopolitics is affecting the market, how the vote on Brexit or something that happened between the trade wars of US and China manifest in the market on a regular, ongoing basis, right? And so to me, how that happens is like those little shark scrubbers that are swimming next to the shark. They watch how the market reacts, like the big sharks, how they're in there, what they're doing, but they can kind of be a part of it without being in the middle of it. And so that's what I've done in this particular system that I've developed with something called 25-cent contracts. They're a very cheap way of taking an investment or taking exposure into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and a bunch of other parameters, some more analytics, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way, with these 25-cent contracts or option contracts, basically.
And another thing you talk about, and we spoke about it in the piece that we recorded earlier, was this whole thing that you trade before 10 a.m. And then I think you said before that like only suckers trade after 10 a.m. What is the thinking behind that timing and that mentality? Because that's kind of intriguing for me.
So this goes back to how the big institutions and banks trade. So what they do is they have much more access to the markets when the markets aren't open, which a real person wouldn't necessarily know and doesn't have access to either. And so they're positioned before the market opens. So for example, if something happens in the Middle East with respect to oil, as it did recently with the Saudi Arabian oil fields being struck by drones, and that has a spike in oil, that has uncertainty in the Middle East, uncertainty with how that's going to manifest relative to the U.S. Lots of things are happening, and the markets are reacting. They're reacting when it first happens, and then they're reacting right after. And the big players are positioning themselves with trades to take advantage in very large size. And real people can't get in that really large size. And so what happens when the bigger markets open, and we talk about, and the model looks at what happens at the market open up to 10 a.m. for the U.S. market, so we're looking at U.S. markets when I talk about 10 a.m., is that all of those institutions and speculators and hedge funds that have positioned themselves because of news overnight and into the market open, they're already there, they're already set to go. And it's like the market opens and they're just, all of their orders get filled. And the small person is like, wait a minute, what's going on? It's like those little shark scrubbers with the shark. You know, sharks are coming and getting their trades done, and they're getting executed right when the market opens, and in a lot of cases in stocks before the market even opens, in pre-market hours. We're watching that in the model. And so the thing that happens up to 10 o'clock is a lot of that stuff basically filters out. It happens. We get to then analyze how it impacted the market in the very, very beginning of the day, sometimes as early as 9:30 when the market opens. But we take into account all of that large activity, and then we trade into that large activity. So again, we're like the little shark scrubber with the shark, and the shark's already gone. And we're now we're following, but with information.
Wow.
Before.
And this is something you use yourself on your own money, your own portfolio.
Yeah. I absolutely do, and a couple of things about that too is with 25-cent contracts, they're short term in nature. They last for generally through the end of the week that we're trading, and so one of the things I do is look on Mondays or Tuesdays in the beginning of the week, because that's when if something's going to happen, it has the most chance of happening well for the investment. And so that's what I do personally. I don't tend to trade much after 10 or towards the end of the weeks. I really do look at the beginning of the week.
Interesting. That's where all the opportunities are.
That's where the opportunities are.
And again, a 25-cent contract, so you buy that option, so you have, you know your downside, but you potentially have unlimited upside or very high upside.
Well, that's right. So, for example, with what just occurred in the Middle East, we talked about a trade in an oil company that was probably going to do well because when there's any kind of issue with oil, the major oil companies tend to do well. So what we do is we look before the market, we position it, we look at the market open to see what the sharks are doing, and then we either issue a recommendation or don't, depending what we think is going to happen. And in that scenario, we did issue a trade idea for that event.
Nice.
Yeah.
And so people kind of log in, you kind of let them know what looks interesting, if anything, and when it does, they put in their 25-cent contracts when the opportunity presents itself.
Right. So
based on what the big sharks are doing.
Well, that's right. So we said, because we don't know, right? At the end of the day, we're watching them, but we don't know if they could be sleeping on the bottom of the ocean that day. We just don't know. But to the extent that they're in there, and we think there's an opportunity for a transaction, yes, we do ask for people to be ready just in case. Because these things happen very quickly when they do happen. You know, you do want to get in as soon as we put out a trade recommendation, and then they have the opportunity to consider it and to potentially get into it.
You know, I had Kim Kiyosaki in that seat, and she was saying, look, Brian, I only invest in real assets and gold and real estate. But she said, I follow Nomi Prins and her 25-cent options, because she said, I understand that from a cash flow perspective. I put out this amount of cash. I know I'm not going to lose any more than that, but I've got a big upside. So you got a fan in Kim, I know.
I know, Kim is amazing, and it's fine. We've actually worked together on things, and I agree with a lot of how Kim looks at assets, and hard assets are very important. They're a very important part of anyone's portfolio, and looking at things holistically from the standpoint of real estate, where you can either live or get rental income, so that's a real hard asset. Any type of sort of longer term asset, like gold or precious metal, or something that's actually utilized in things. So there's a physical nature to it as well as a financial nature to it. And then yes, what I do is also look at markets, and I very much do quantify that downside, which is why I do like these 25-cent and inexpensive options, because I know at the end of the day, not every trade is going to make money. But I prefer knowing what my downside is, so that I know when the trades that make money do make money, I can balance those things off, and net I'm positive. But I can evaluate where I might lose something on any given day relative to what I gain on all the other days. And so I can balance it that way, because again, since leaving Wall Street, I don't get the same, paychecks that I got on Wall Street. You don't get the same big
bonuses anymore.
Well, exactly. So it's very important for me to preserve what I have, as well as to allocate it and then invest it properly. And so the idea of these 25-cent options and these 25-cent contracts is to be able to do that. And that's what I do with my own money, and that's what I do with this system and with this product.
And it's been very successful. So people are really having their eyes wide open as to what this can do to their portfolio, and making some pretty big gains as well, right?
Yeah, the gains are very big, because again, it's that momentum. Think of that shark again. If the shark continues in that direction, and again, we're there in the market when the volume and the momentum is most extreme, and we're alongside that, and looking at other parameters as well. That's how the money is made. That's where that positive upside is, and that's where a lot of people have been able to make a lot of money, and sort of being a part of that initial start to the day in the markets, in the right trades.
Yeah, and the right option at the right time can just be a massive investment. I mean, I traded options for a long time on Wall Street, and I learned about them when I was at MIT, and you just see, when you can understand them and limit your downside, it's a tremendous way to leverage and get big gains from the market.
Right.
And so we just talked about that. We filmed a separate video, so people can click on the link below or go to londonreal.tv/Nomi, N-O-M-I, to learn more about it. I remember the first time I understood what a call option was. It was in 1991. I was at MIT in some classroom on a whiteboard with a friend, and I was like, we couldn't get it, and then I understood what it was, and it was a real groundbreaking moment for me, to see what they can actually do.
Yeah. And to an extent, there's the math behind how options work and how they price relative to where they're underlying, or where their share prices that they're associated with, and how things move and how much time they have left before they run out, and all sorts of different components of an option. But then there is also this idea that yes, they're very powerful in terms of leveraging what the market's doing anyway. And for example, someone might not have the money to buy an Amazon share because they're stupidly expensive, but you might be able to buy an option on Amazon, which can give you the same upside, but actually greater, because you're putting a lot less into that particular transaction.
Yeah. For people that don't understand, I don't know what Amazon shares are, but I'm guessing hundreds of dollars. But with a 25-cent option, especially a short-term option like a week or something, you can get kind of the leverage of a bunch of shares, and if there's a move, you can make massive amounts on your initial investment without having to invest in that core asset.
Right.
And you can take advantage, like you said, all these weird, strange global events, which seem to be happening every week now. Well, things getting bombed, and oil prices, and elections in the Middle East, and threats of war, and new presidents, and people talking about universal basic incomes, and it's crazy. And this is a way, I guess, of taking advantage of those big moves.
Well, right, and also what we do is we watch for the impact of those moves on all of that pre-market activity, before the sharks set out, throughout the world. So starting in Asia to Europe and the UK, and then on to the US, and how events actually manifest depending on when they happen. Depending on whether it's an oil event that happens, on a Sunday in the Middle East, and then it goes into what happens at the night in Asia, and then in the morning in Europe, and so forth. There's also a lot of time. We're in a big world now, where information is instantaneous, but not every market is opened all the time still. And so therefore you can see these patterns, these trends happening and building up as certain events take place, and then how they actually ultimately get into what we specifically look at, which is the US market open. But after all of those other international markets have potentially been opened and been showing us trends and patterns relative to all these events. And yeah, the markets today really do operate much more on these knee-jerk events and processing them and the psychology of processing them than they did when I was on Wall Street and maybe, you know, also when you were on in banking, because it's it's much more emotional. What markets do. It's no longer, well, this company's good and they have a good long-term plan and they have, you know, good term money versus, you know, the debts that they have and they treat their employees well and all of these things. That's a part of the financial system, but it's also very much like what just happened like 2 hours ago. And that's a very new phenomenon, which, you know, we do incorporate into the 25-cent trader model, but also in general that I've been looking at very particularly in the last couple of years, as
understanding
markets have
that
changed.
emotion.
Yeah.
Okay. And there's a whole lot of rocket science going on in what you do, right? Because you have this kind of, you look at all these different indicators, but you end up telling people, like with a green light or a red light, buy this or don't buy this. So that way you do all the number crunching and all the complicated stuff. Is that right?
Yeah, no, that's right. And even to the last moment when we issue a trade, we are looking at that green light. We're looking at what's happening like right now, where those sharks are, you know, what the pre-market trading looks like, to even make that final decision as to whether or not we see that green or whether or not we think, you know what, it's just a light green, it's a little yellow, maybe not, and not necessarily put out a trade if that's the case.
Wow. So it's like the minutes up till 9:59.
Yeah.
And you're seeing if everything's in place. If it is, you say green. If it's not, you said let's wait another day.
Right. Or even if that builds up earlier from the 9:30 when the market opens, we're literally watching that that whole period of time.
And then at 10 o'clock you go off to the gym, go do something else. You're done by 10.
Well, that's exactly right, because after that period is when all the major volume happens in the market. And even if it happens, like some event occurs at like 2 p.m., at that moment, we're actually not involved in that trade at that moment, or in a new trade at that moment, because we still feel, even if looking at various patterns and how the market reacts to even news coming out in the afternoon, the real acute behavior is still in the morning. And so even if something might present itself in the afternoon, just in terms of all our analysis and statistics, we don't feel it's going to have the same opportunity as what happens in the morning.
Yeah, that makes sense. And I remember the after-hours trading and all the things they would do, and people don't know that's happening with all these institutions. So having someone on the inside to understand that is super helpful for like regular investors. Yeah. So no, it's a really exciting product, really interesting. So people want to learn more about it, LondonReal.tv/Nomi. There's a link below. And again, you walk through the whole strategy behind it and how people can take advantage of it.
That's right.
I wanted to take you back to a day where we were both in New York City. And the reason I want to ask you about this day is because I think it kind of tells us a lot about you, your life, your journey, the choices you made. But the day was 18 years ago. It was September 11th, 2001. I was flagging a taxi on Houston Street between A and B where I lived, and I was going to my .com startup job. At that point, I'd kind of moved on from banking to .coms briefly before I went back. You, I think, were at a corner office at Goldman Sachs, which was very close to the Trade Center. You watched all this happen. What happened that day to you, and what was going on in your mind even up to that day, and how did that kind of change the course of your life?
Yeah, it's really interesting because I had the corner office at Goldman Sachs, which is like this very coveted thing on a high floor. Yeah. I ran a couple of analytics groups, and it was the 29th floor. And that morning, one of the things that happened was one of the analysts who worked for me in my department came and said, you know, I think I just saw a plane go by really low next to your office. I was on the trading floor at the time, so it's like there was the corner offices, and then all in the middle was all the trading desks. So I was probably looking at a trade at that time, and he says, you know, there's this plane that just went by, and it's like, okay, well, that's weird. We're not actually in a flight path, but okay. And then like almost seconds after that, I'm still on the floor, and all this like sort of ticker, like we start to see all these little pieces of like paper, like almost like paper dust in the atmosphere, in the air outside of these windows. And then we're looking at the TV, and the very first reporting of what had happened was that, you know, maybe some helicopters or something hit the World Trade Center by mistake. And that was the original, just no one knew. Like we didn't expect there were terrorist planes, you know, terrorist-guided planes basically going into the towers. We didn't know. So we're opening the TVs now on the trading desk, and we're watching fire engulf part of one of the floors or several of the floors of the World Trade Center. And it's all very weird, but no one at that moment quite knows what's going on. So then, literally, I go back into my office to just call some people that I know at the World Trade Center, working at the World Trade Center, just to be like, you know, how are you guys? What's going on? Are you okay? And literally, as I'm going back into my office, same analyst comes in with me, and we see another plane literally fly like right past the outside, which was a second plane that hit the towers. And that plane I actually saw, and that was I believe the American Airlines plane. But now I'm not sure if that was. I believe that was the plane.
Okay, and so you saw it
but I
go
actually
in
saw
or go
a
by
plane
you.
go literally by my windows. Not into the towers, because that was then past my building, but literally flying that low, wow. You know, 29th floor level low, and headed towards the towers. At which point, there started to be much more conversation as to what these planes could be, because at this point now there's verification that there's like these two large jumbos that have basically gone into the World Trade Center. And there was much more smoke at this point. Like everything just started happening instantaneously. So now there's more paper, there's more smoke. It's all outside our windows and everything else. And so the directive from Goldman was that, you know, you guys should basically go down to the 4th floor, which happened to be where the energy trading was happening, but it also happened to be, you know, so where the stairwells kind of stopped. So go down the stairs, go down to the 4th floor. So I had to take my analysts and the rest of my group. People took their groups out. There was a lot of like, at this point, panic was building because nobody knows what's going on. I'm like, you know, let's go. We'll go down the stairs. We'll be fine. We got to the 4th floor. And at this point, a lot of the phones are starting to go out in the area. You know, cell phones are starting now to work. You know, a lot of things are happening very fast. And I remember also a bunch of people from our London office, as it turned out, had flown in that morning, like before this stuff happened, and were in our offices because we were supposed to do an offsite, as it turned out, like one of these, like, you know, go to New Jersey, like hang out with your global team and actually talk about options, as it were, that day, which obviously didn't happen. But the energy traders on the 4th floor were being told by the head of the energy desk to just keep trading, right? And the reason for that was because of those knee-jerk kind of reactions to events, which is that something's happening with planes, which means something's happening with oil, which means somehow oil prices are going to go up, which means we need to get ahead of that trade and trade. And that was sort of the directive on the floor. And I was like, I want to kind of leave. I think leaving would be good. Leaving the building would be good. And they were like, you know, just stay here, don't leave the building. You love to trade,
but still you wanted to leave.
I need to, because you know, it's like, I think the best thing to do would be to not be in a building. That was my feeling.
Which wasn't obvious at that time. Like, so many weird things are happening. No one knew what was happening. Right. So yeah, but that was obviously a good instinct.
That was my instinct, and I wound up taking you know, a bunch of people who worked for me. You know, they gave them the option. You know, I said, you know, you guys can stay. I think going would be good. Because then we don't know what's going on at this point. We still don't know what's going on. For all we know, they're attacking every building on Wall Street. Like, we just don't know. Right. And, you know, if you're going to attack the World Trade Center, you're probably going to attack Goldman Sachs. I mean, we don't know. I mean, that's the mentality that I'm kind of thinking, well, you know, whatever's happening, this could be a pattern. And so we left, and I wound up walking all the way up Broadway, which was, at this point, you know, there's ambulances, there's firefighters, there's a lot of smoke, there's more ticker, people are really agitated, and people are trying to get out of the World Trade Center. And my feeling was to get out of the area. And obviously no public transportation at that point was viable, so we just basically walked north, walked uptown, and I lived sort of on 20th Street at the time, and just basically kept walking. And throughout that week, as the fallout was happening from knowing what had really gone on at the towers, I wound up volunteering with a friend of mine there were different services that were set up throughout New York to try and start to match some of the items, jewelry, certain things, watches, things that were coming from some of the bodies and some of the debris that was falling around the World Trade Center, with photos that were coming in from loved ones to find their loved ones at the Armory, which I lived near. So that was how I chose to spend the days after the attacks. And at Goldman, however, there had been a call from my boss to basically get us back into the office like 2 days after the attacks. There had been an agreement made between Goldman Sachs and the city that if that they would have a path on the waterway to go down towards Wall Street from the middle of New York to be able to work if they needed to. And their reasoning for that was that they did have to make markets, even though there's international markets all over, but they had to make markets and act as normal as possible. And I remember for me personally at the time, I was like, okay, well, I'm at the Armory where there's like weeping people trying to find out whether, their loved ones were dead or alive, and throwing out pictures of what they look like or what their items look like to locate them. And I have my boss saying, no, you guys need to get back into the office. And I'm thinking, no, this is just not right. This is really not a sort of mentality that I really want to be a part of. And it was a very visceral reaction to that difference between what's happening in real life and what was being required at Goldman.
Right.
And so the decision I made really then was like, this is just, I'd already kind of been disillusioned for a little bit, but I mean, this was really a sort of hit home moment where I was just like, I'm not long for this industry or position.
Wow.
Yeah.
You must have had some trauma if you really think about that day. I mean, watching the planes and all that, and I mean, I wasn't that close.
Yeah.
I was in the city and I walked down and I saw it, but you were really close to all that,
It's interesting because I've never really thought about that. I've always been someone who, I have a rescue diving license. I've dealt with, I've taken the courses in California where I live now in terms of sort of rescuing in earthquake situations and stuff. I've always felt that in emergency situations, I had the personal fortitude to figure it out. Or help people along the way, or do whatever. And I never really thought about how it impacted me, just how whatever needed to be done got done.
Right.
Yeah.
And so you felt kind of your values and the values of Wall Street very obviously misaligned, and it was just really crystal clear to you. And it had been kind of bothering you a little bit for a few years anyways, but that was ultimately marked what would soon be your departure from the street, they would say. For people that don't know what it's really like inside of a bank, not to mention a high power, aggressive, and very well respected bank like Goldman Sachs, what is it like? How could you describe that to people? I mean, I could try, but I'm really curious what you would say. I mean, what is the mentality? What is it not?
Right.
There's also a lot of people familiar with the show Billions, right? Which is about hedge fund managers. But back in the 90s, those guys were at banks like Goldman, right?
Yeah,
they were in proprietary trading desks. Yeah. So the mentality was similar. There's actually a plot line in Billions where the guy's trading on the back of the 9/11, stocks and things. But how would you describe that to people?
Yeah, first of all, that's a fantastic show.
Why do you like it?
I love the writing on that show, and I actually like, one of the things I really like on the show is that there's a lot of conflict within the lead characters, even the ones that are making tons of money in their personal lives or alongside what they're doing in their professional lives. That's actually shown in that show. It's not like they're 100% about making the money. I mean, they are, and it's a game, and it's a win or lose thing, and there's a constant nature of that behind the scenes. And even with the DA character, it's like there's a lot of winning and losing. It's very much binary, but yet there's a lot of gray. There's conflicts in personal life and everything else, and so
I'd say it's very accurate. A lot of those things. I know a lot of guys in hedge funds, and like you said, from the dress to the personal lives to the houses to everything. It's a decent, reasonably accurate look.
To the extent actually where I never wanted to see that show because I was like, I've lived that show. I never even wanted to watch the show, and then I kind of watched the first episode probably on a plane. Actually, I think a plane coming here at one point, and I just was like, hooked on it, and so now I'm caught up on the seasons.
Yeah, I was the same way. I didn't want to watch it. I was like,
I've done that.
And then I watched the first episode, and I was waiting for all the stereotypes and stuff, and there was a few in there. But then when I looked it deeper, I was like, this is kind of real, like what goes through a trader's mind, what their life is like, what it's not like, how it's not all glamorous, how the money doesn't fix everything, you know.
Yeah.
It's interesting to watch.
It's interesting. And actually, as that show goes on, just to finish up on that show, is there's a character that comes on, like a younger character, who uses multiple pronouns. So basically, it's considered a they and a them in terms of like just having sort of multiple sexualities inside. And but one of the things that they do in the show is they evolve in their career with respect to the hedge fund and with respect to making money and choosing the right trades and everything else. But they also kind of maintain, we'll see how the show progresses in the next season, that sense of just doing the right thing while still trying to play the game right.
Yeah.
And it's very interesting because I think for me, on Wall Street, there, you know, especially working at a Goldman Sachs from Bear Stearns, it was quite a transition because when I interviewed for Goldman, which was in New York, and I'd been in London working for Bear Stearns, I remember at the time that I was considering kind of ending banking anyway. I was already, there's a lot of stuff going on in the 90s. There was, for example, a Jubilee 2000. Which was about canceling the debt for poorer countries, major event that happened in Birmingham, UK at the time that I went to while I was still working at Bear. So I was in this sort of covert, like I want the debt to be canceled for the people on the ground. On the other hand, I'm in these institutions and we're trading around it, and it was just a weird sort of thing in me personally. I was straddling both worlds. But then when I did interview with Goldman, there was a sense at the time for me that, you know, if you're gonna stay in banking, and I'd been at a number of different firms at this point, then Goldman was kind of like the epitome of banking. Like if you're going to be in it, don't be in it to go to Merrill Lynch. You know, be in it to go to Goldman. And that was kind of also happening when I moved there. But I interviewed in New York, and they also sent people out to interview me in London because they have a long interview process, don't they? And it was 9 months. That's exactly right. It was 9 months of an interview process. And I interviewed everyone throughout, you know, the top of the firm. And it was really interesting because I remember there was one moment I was in New York. I was still in the midst of this 9-month interviewing process. And I was on one of the trading floors at the Goldman headquarters on 85 Broad Street, where I was that day also of the 9/11 attacks. And Lloyd Blankfein, who was running the division at the time that I wound up working for and ultimately became the CEO of Goldman Sachs, took me onto the floor, like physically walked me onto his trading floor and said, you know, take a look, you know, like it was this like grand, you know, gesture as to like this like promised land of banking or whatever it was. Take a look. I was like, I'm looking, and he's like, you know, this is not Bear Stearns. Yeah, just so we're clear, like it was almost like a look, you know, if you're going to be with us, you know, it's totally different. And it was very sort of physical presentation of how Goldman was, and that was really the mentality of Goldman. That, you know, they had what they called a culture of excellence. I mean, that's how they defined it, and you were very much a part of it, or you weren't at the firm. I mean, it was very simple. And if you're going to be at the firm, you were part of that culture, and you were called a culture carrier. And in reviews that were done of your performance throughout the years, you know, carrying that culture was a component of the reviews themselves. And that culture was ultimately, it was a very aggressive banking culture. That's what it was. But they sort of wrapped it in this notion of being perfect, or being as close to perfect as you could get in banking.
And how would that manifest itself? As in long hours, we expect presentations to be on point, everything you do is just excellent?
Well, yes. I mean, there's definitely long hours. I mean, your life was Goldman Sachs. I mean, that was pretty much how it presented itself. You know, if there was a need to, and my boss would do this, you know, have a call or call someone at like 1 a.m. in the morning because they needed something in Tokyo or whatever. You were just available. You know, that was kind of the idea. That is kind of what you signed up for. And if there were offsites, or if there were activities that Goldman wanted to do outside of, you know, the actual building or working hours or traveling hours, and you just did them. I mean, it was just part of how it was.
If there's a weekend offsite, you were there.
You were at everything, and you were pretty much living and breathing Goldman at all times.
Right, which made it excellent.
To them, it made it excellent.
And how was it for you?
So I had some real issues with how that was manifesting even before 9/11, because around that time there was a lot of corporate fraud that was becoming apparent, some really big name frauds like Enron and WorldCom that was coming apparent throughout not just Wall Street but the world, like the news was starting to focus on companies that were creating sort of financial versions of themselves in tangent with the major banks to hide money, to sort of like, misrepresent their balance sheet, mislead their investors, and so all of that was happening as well. And so I was working at Goldman, for example, when Enron was a client of Goldman. They were actually competitors as well because they were both involved in trading energy. Yeah. Options and futures and everything else. And here I was sort of developing models for Goldman to look at trading strategies and seeing them go up on Enron's website, but also knowing that we're both working with Enron and competing with Enron. And this was just one of many names like that. And it just seemed very wrong. And also,
to continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy, designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best sort of protect that investment for those risks. And so that's a lot. They're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way.